Hi there, traders. So let's talk about today how I was able to catching 16.6% risk reward ratio Dow Jones trades and 10.3% Nasdaq trades. So let's start with Dow Jones. Very simple, like let's keep things super simple. So I can actually delete everything and show you in the real time, basically, you know. So everything started here when we have this movement back in downside here. So we see how the market is going all the way up, and now we have, like, let's say, pullback movement to the downside, but immediately the market is going poof, back to the up. So now we know basically the basic information. What we know right now is, you know, we have this level of the holding, what is holding, and this level of the holding, what is actually holding the price already, you know, above. So for me, that's mean it's like it's giving me some more confirmation, you know, in upside. So the second thing is gonna be, I'm gonna put this major rejection lows down. I'm gonna mark that zone, what is gonna be the important zone. And so the next thing gonna be, so now we see those market lows, what we create here, and after that retest. So, and now you see when market is actually gonna go back above this area, and now you see how market is like inside this box. But the one thing what you already see inside here, you see how we break those trend lines. Let's change this one here. You see how we break that. We break the trend line retest, but we still holding, you know, we still holding. And let's put the lever of the holder here too. So that's the lever of the holding. So that means the price is still holding. And the next time happen exactly the same thing. We break the trend line retest, but you know, when we break the trend line, same thing, we still holding that level and get rejected, retested, going back and going back again and retest that same level. So that's mean that, like, we already 1, 2, 3 and 4 times touch that level. That's mean like this level the holder is holding, this is holding, and now this level is holding for me too. So the first thing what I want to do is going back to this rejection high, and think what I want to see is we're gonna break that thing, we retest it and start going up as a side. So, and back here, so where is our take profits? So take profits are so take profit 1, take profit 2, and take profit 3. You know, very simple levels. Even the last one is pretty crazy, to be honest, but I didn't. So my entry was, so when we look in this principle here, we break, retest and going. So after the retest is gonna be entry. So here was my entry. My stop loss was last candlestick wick low. So here was my stop loss, and here was my take profit. So it's like something like that. So 16.5. So this was my trade. You know, very simple, you know, information. You know, you have to keep things super simple, basically. So we have level of the holders holding nicely, rejection lows. We holding those rejection lows. Now we create the new rejection low here, this line here. We holding those rejection lows. So now we start looking the rejection highs. When we break the rejection high, retest, that's our confirmation to entry. And take profit gonna be our last rejection high. So we have this rejection high here, we have this rejection high here, and this rejection high here. So like when you're gonna hold that trade all the way up here, you know, it's a risk reward ratio 30. You know, it's the next level. But you know, that's more than enough. You know, that's more than enough for me. And absolutely beautiful trades. And then the second one is Nasdaq. very similar concept, because you see we have absolutely same things, same market structure, same holding. So this thing is a little bit different. So when we're gonna zoom in, is same thing, level of the holder. Market didn't reach even that level, so after that market movement, we create the new of the level of the holder, what we was holding nicely. And so for me was why when this breaking structure happening and we have this movement, so what I was doing, that in that particular trade, I was actually measuring the Fibonacci, the pullback. I want to see, like, is this pullback real or is not real. So when we now zoom in, so my entry was above 0.25, so exactly where it was 0.25 Fibonacci level, exactly that level is our rejection level too. Like when I'm gonna remove Fibonacci, you see this is our rejection level, and I was looking exactly the same principle. We're gonna break it, retest it, and going higher. So I didn't know first time is this is all good or no, you know, because we shoot up and then we have huge rejection, and I was like kind of like, let's wait a little bit more, you know, to get some more confirmations. And then I see this point, and then I was thinking, okay, it's gonna be the manipulation movement, but how to see, you know, if this manipulation is real or not, or do we respect some kind of principle when we doing this manipulation movement. And right now, when we use the Fibonacci breaking structure, so we see perfectly how actually price is, you know, perfectly here in 618 and 0.7, nicely respected. So I was actually thinking to start trading already here, but then I was thinking, okay, let's wait a little bit more. And then after that I enter my first rejection level, break and retest, and that was entry. Then risk reward ratio, like basically same trades. Like for me, those two was exactly the same trades, you know, for me. But that's it. Very simple, very simple. Like we have to keep things super simple, and you know, you have to understanding what information is supporting your thoughts. Like what's happening here, you know, you wanna go long, so what the information is supporting to go long. And yep, and same time we like retest the trend line, level of the holder, retest, everything's nicely holding up, you know, super nicely. And for that kind of structure was even like we didn't retest those level of the holders. That mean the market is actually strong to going higher, so that's why we didn't have to even touch that first level of the holder what we make in here. So we make another one, and here we retest that thing again and breaking structure after that. So here we breaking structure already after the the retest. So we retest here, breaking structure, going back, breaking structure, going back, breaking structure. We break the structures all the time. So now we have this movement back. So this movement originally can retest this zone here, you know, when we have some candlestick here. And then we're gonna go and break in the structure again. Like when you see that, we break above that, and now we retest. So now we make the new level here, but we retest again. You just look at the market structure, you know, after the retest that again, we break the structure. And now we didn't even retest after the breaking structure that thing anymore again. And even this one here didn't retest the level of the holder. So that's me, market is very bullish for me. And soon as when I see we actually respect the Fibonacci principles, I was very confident to take that trade here. So when you take that trade, that's your entry point. Now you're going back and looking your take profits zones, you know, rejection high, and rejection. So this is gonna be like that. This one here. And just going massively higher. And the ultimate one was this one here, the same like Dow Jones, exactly same, and damn, it's still going. All the way up here will be 17.4 risk reward ratio. Very simple things, you know. Same thing, we're holding this level nicely, we're holding this level nicely, and here we have even like very nice, you know, you're looking inside more details, you know, we have W what is supporting this level of the holder, you know, here same thing, we have this W of holding level of the holder and retest going higher, you know, very nice W pattern, and it's just going after that W pattern. Yeah, super good. Okay, I'm gonna finish right now. Nice little back pocket information for future, and I'm gonna see you every single one tomorrow. Ciao.